Gold prices plunged 4.5% in a single week. This marks the steepest weekly drop in over 3 years. And there are three things which contributed to this drop. Number one is rising Treasury yields, which hit 4.5%, increasing the opportunity cost of holding gold because the higher yields are, the less attractive gold for investors. The second one is dollar strengthening. The US greenback surges to 1-year high, 207 at DXY, diminishing gold's appeal as a hedge against uncertainty. And the last and most important is the shift in monetary expectation. Last week's CPI data showed 3.3% at the core level, which excludes food and energy, which is still far away from the 2% target rate set by the dual mandate in the FOMC monetary policy. Now, this 3.3% prompted a shift in rate cut expectation, with the probability of a rate cut in December falling from 83% down to 59%. Now you can see that gold is facing multiple pressures from the upside, and there are more downside potential, but these drivers were in play in the last 2 weeks, and this week we have absolutely no data at all. So the question is, will the news and the data from the past 2 weeks still have relevance this week, or the market is going to completely flip around because the market sentiment is shifting and traders are forgetting what happened in the last 2 weeks? So here we have gold on the 2-hour time frame. Before we move on to the analysis, let's check the open position. So currently I have 2 positions running intraday. These are long position, 77 and 62 pips. The highest was 120 pips since opening the position this morning. Now this position was shared in the VIP Discord, and I'm going to explain my bias, why I entered into a long position when most of my positions are short on a higher time frame. So if you look in the economic calendar, you can see that this week we don't have as much data as we had in the last 2 weeks. We had presidential election, we had CPI, we had NFP, we had FOMC interest rate decisions. The last 2 weeks was very generous to us in terms of economic data. But browsing this week's economic calendar, you can see there's not much. We have some building permits, we have some British CPI. Now this is going to be important, but my focus is in the US economic data. Also, we have ECB President Lagarde speaking, Christine Lagarde, the conference, which I highly recommend for traders to listen in and tune in and see what she has to say. And also we have the good old FOMC members speaking, but my guess is that they're going to echo what Jay Powell said in his last meeting. And Thursday is going to be pretty much the highlight of the week, with the usual continuing and initial jobless claims. Now I'm going to live trade these because Jay Powell recently mentioned that their focus is going to be, of course, on price stability, but mostly on the labor market. And you can see the sharp contrast between this week and the last 2 weeks, where we had loads of economic data, but this week we don't have much. And my speculation at this level is that gold is going to get a breather from the sharp sell-off from 2800. Also, I have to mention the geopolitical tension is further escalating because President Joe Biden just allowed Ukraine to use long-distance missiles against Russia. And those missiles were made in the United States of America. So now that we discussed the macroeconomics and fundamentals, let's dive into the technicals and find some entries and exits. You can see that when the sell-off started at just below 2800, the market structure was very nice, bearish, lower highs and lower lows. This is a textbook bear market. But shortly after the presidential election, you can see that the sell-off has intensified in the gold market and price dropped 700 to 1,000 pips every single day. Of course, we were managed to catch it because I do morning briefings and live trading, and I'm prepared for every scenario. And as the sell-off intensified, you can see that gold price went too far away from the main trend, from the general trend, when we had a bunch of economic data and all of them were pretty inflationary. And focusing on purely technicals, you can see that we have about 800 pips between the main trend and the current gold prices. When prices move away so far from the trend, this means that traders have overemphasized the news over price action. And my speculation this week, when we have no economic data, is that price could make a correction on gold and return close to the main trend. And that's the sole reason why I entered into 2 long positions this morning, targeting 2630. Now, in order for this to happen, price needs to break through the weekly pivot level. which so far touched twice today, and chances are high that price is going to break through and continue to 26.30 or maybe a little bit higher. So if you're just watching the video and price is currently still sitting below the weekly pivot, I think there's still time to enter into a long position. Looking at the open position, you can see I'm still in 88 pips profit, but the target is somewhere around 2600, 2630. So if you look left on the chart, I always target the previous highs and previous lows. So if you're entering now, make sure that you leave wide enough stop loss for price if it decides to come lower a little bit. And remember, there is no guarantee the price is going to continue higher because we are still in a bear market. And all the factors are explained: rising yields, strong dollar, monetary policy expectations are still in play. Nothing has changed, so the sell-off could easily continue, and my speculation is purely based on how traders and investors trade on weeks when data is very limited. If you'd like to join the AlphaFX community, go to alphafx.eu, go to purchase, and select one of the memberships. I do morning briefings where I help traders preparing for the day and the week ahead, showing my open positions, explaining what I'm expecting on gold, indices, and some currencies, depending on the macroeconomics and market sentiment. So if you want to see my positions and get notified when I enter into a trade, and if you want to be prepared with me for the week, go to alphafx.eu and join the community. I hope you enjoyed the video, and please make sure to subscribe and hit the like button. Thank you so much. This is the AlphaFX.